Welcome everyone. I am Luis with Antonine Capital, your business loan brokerage, helping you either grow your business or purchase a new business. We're talking about anything to do with financing with a focus on SBA loans. Like I said, this is part of our 52-week push, doing 7 videos a week, getting y'all to master the SBA loan process. This here is week 3, day 3. Yesterday we talked about the credit requirements, both personal and business, for just applying for SBA loans. Today we're going to talk about equity investment and collateral. Can sum this up with 4 words: skin in the game, right? Having skin in the game is incredibly important for any type of financing, really. I mean, it doesn't matter that you're going to an institution or a lender. Usually, person to person, we'd like to see folks that have a vested interest by way of capital, and when they're going into any type of financial arrangement. And that's what we're going to talk about today. What is an equity investment? So an equity investment, again, is your investment of capital into the business. So that's your initial contribution. For startups, that's the capital that you're putting right into the business right at the start. For SBA requirements on not just startups, but anything really, is usually they're looking for 10% contribution or more, right? Minimum is 10% of the loan or the project cost that you're contributing into it. And really, that's really the minimum, right? I've had clients that have 10% for the down payment, for the some call it a down payment, but it's that's the requirement for the project. And then they also have funds for reserves for those that are, that backup funding. Nobody really likes to see you investing your last dollar into this. It's great that you have a down payment, but again, it goes into that liquidity and skin in the game. You shouldn't be completely dependent on the loan for success. So it communicates just that financial stability and your commitment into the enterprise that you're working in or building. Now, collateral. So we talked equity investment. Now, collateral. Collateral are those assets that you pledge to back up the loan. What you're putting up at risk to be taken from you, if anything, should you default on the loan, meaning not make good on the loan or not pay your loan. Samples of collateral: the easy one that everyone gets right away is real estate. That is personal or commercial. So your own house. Many lenders like to see borrowers or applicants actually be homeowners. It shows financial strength and stability. But also, if you have equity in your house, that's something that the lender, if you have a very young business, they may say, hey, yes, we will extend the SBA loan, use the guarantee that the SBA has given us, but to sweeten the deal more, they would like to see you put the equity in your personal property towards collateral towards the loan. So that's something that you'll see. So that's a good example of a collateral. Equipment is another. Machinery, vehicles, tools, inventory, that's the actual goods that you have available for sale. Those can be put up for collateral, and receivables. So that's any customer invoices that you have coming your way that can be used as collateral. So lenders try their best to use collateral as much as possible. Personal guarantees are usually required for businesses where owners have less than 20% stake in the business. But again, personal promises or personal guarantees are something that lenders are usually going to want, especially with a newer business that maybe doesn't have as great cash flow or no cash flow. So the importance of equity and collateral, let's wrap this up, is increases your chances for approval for a loan. It affects the loan amount. Or obviously, if you can put out more equity and more collateral, then you can borrow more. It improves the terms. So you that may be both interest rates or repayment terms. You can go out further because you have more equity and more collateral into the loan. So get ready for all this, and prepare for equity and collateral requirements. Evaluate contributions. See how much you can contribute and document that. You should be very organized. Like I said, this is one of the biggest hang-ups that I see with small business owners is lack of organization. You should be able to demonstrate the contributions that you've made. Um, Organize all your asset documentation. That's number two. Have up-to-date valuations on and proof of ownership of all your collateral. And lastly, understand the SBA expectations. Review specific requirements for the loan type and industry that you're in, and that's something that we can help you along with. But the SBA, and you'll find a link to that, and if you're watching this in our blog post, as SBA does provide collateral guidelines. So in closure, three things is equity investment shows your financial commitment to the business, skin in the game. Collateral reduces the lender's risk and can influence loan terms. And last, proper preparation in financial documents and asset valuations can be critical for your application, just to really show what the state of your business is. For tomorrow, we're going to talk about location and operation requirements for SBA loans. If you've really enjoyed this, head over to our site and you have any questions, and reach out to us at AntonineCapital.com. Sign up for our newsletter. These videos are available on a monthly basis via email, via our newsletter at AntonineCapital.com/newsletter, and sign up. We'd love to hear from you and help you grow your business or acquire a new one, and help you in any which way we can. Thank you so much, and see you next time.